Yo, what's going on, guys? It's your boy Secret to Invest, bringing you back with another video. And look, man, I'm gonna keep this short. Sorry. First thing first, I'm gonna say I am not sponsored by Qualtrim. I only use their website for my own due diligence. So don't comment below that I'm sponsored by this company because I am not. And I only recommend this company because it's a good website to use for picking dividend stocks. Okay, guys, so we got that out the way. So look, man, I'm gonna try to keep this simple and basic, and I'm gonna try to pick the right metrics to use to pick a dividend stock. And first thing I'm gonna pick is the payout ratio for a stock. Look, my sweet spot for a payout ratio where I think is not too risky to buy is 60%. That's my payout ratio. And then also the PE ratio also matters for a stock. Okay, guys, so for the PE ratio for a stock, I recommend my sweet spot is like a 30 or to a 40 PE ratio, which is a price earning ratio. And then, guys, also when I look at a stock, I always look at the annually section. I mean, it's okay to look at the quarterly section, but I recommend using the annually section. So first thing first, we gotta look at the revenue and make sure there's constant growth. And right here, this was because of COVID, and mostly big companies or companies got impacted by COVID. So on 2020, I wouldn't really recommend judging a company because it was impacted by COVID and many companies got impacted by COVID. But if it wasn't because of COVID, I'm pretty sure this will be steady growth. And this right here is steady, constant growth, and that's what you want to see for a stock, for a dividend stock, is to have steady growth, steady revenue. Because with that steady revenue growth, we can get more dividend income. Second, I recommend looking this at the cash flow right here. Make sure that there's positive cash flow and no negative cash flow. I mean, it's okay to have some negative cash flow, but if there's negative cash flow for a company, make sure you do your research on why that on that year that company had negative cash flow. But like I said again, it's probably because of COVID, of life events, something happened to the company. Make sure you do your research on fundamentals for that company if it has negative cash flow. Third that I look at is the net income. Net income is what they use to pay their debt. With this right here is what they use to pay their debt. So look right here, steady growth, and that's what we want to see because we're also with steady growth for a net income, we can get more dividends. They can pay off their debt, and then also, guys, for a company, if they don't pay off their debt, and then we get like a huge pullback, market crash, something that will bring the stock down by a huge amount of percentages, the ones that have more debt, bro, they are going to be the first ones to go during that whole life event for like a market crash, something like that. The ones that are in major debt, they will be the first ones to go bankrupt, to basically file for bankrupt, and then you are going to lose your whole money right there. So make sure when you pick a stock, make sure it has constant revenue growth. And then look right here, guys. On 2020, man, Texas Roadhouse, it got impacted because of COVID. And to me, I don't even look at that because now we are past that. Well, I think we're past that. I'm not really sure. And also, what's important is you have to look at the EPS, man. Make sure, once again, it's constant growth. Look, man, people make dividend stocks picking hard, but it's really simple if I'm being honest. With this app, it's simple. But when I try using Yahoo Finance or like any other website for the balance sheet, it's just confusing because it's different numbers, different things that you have to look at. And to me, I think this right here is much more basic, much more simple. And to me, I like simple. And I wanted to put $10 a month for this right here, and then also make sure that the cash is more than the debt. So basically, a capital lease is when a company lease like an asset. Like for example, you work for like a warehouse, and then they rent or like lease a forklift. That is an asset because they use that forklift to make money to move stuff. And they have meat on lease because there's a market for meat, of course. So yeah, that's that. And then also, if the debt is more than the cash, make sure that the cash can pay off the debt. From what I read on a Warren Buffett book on what he does is that he multiplies this by 3 times. So basically, let's say the cash is 173 million, right? And then the debt is like 500 million. So what I heard from Warren Buffett is that he multiplies that cash by 3. And then if that cash cannot pay off that debt, then he doesn't buy it. He doesn't really buy the stock. And then also, what's important, you have to look at the dividends, man. Make sure, I recommend picking a stock that has a dividend growth over 12% each year, man. And right here, man, 60%, 70%, and 90%. So me personally, man, Roll House was one of my favorite stocks because it made me the most money. And then I'm gonna show you right now how much it made me. It made me $232. So basically a 26% gain, and that's huge, man. That is a lot. I mean, I would say my portfolio is at least on the positive side. Look, I'm showing you right here. Okay, guys, look right here. It's on at least on the positive side. The thing is with me is that I trade options, but I do keep up with my portfolio on a different account, on a Delta account, which basically is a paper trading portfolio. And so far, I am up 3%. So basically, I trade options here and there, and that's also why my portfolio gets impacted. Like right now, I got Palantir calls because on Monday they are gonna come out with the earnings. So let's see how that goes. But yeah, man, like picking a stock for dividends isn't really that hard. People make it seem hard, but it's really simple. Like those right there that I mentioned for the metrics is basically what I use to pick my dividend stock. And I'm gonna tell you right now, man, my method it works. And then look right here, Valero, 9% win, right here, 9% win on Valero. Now let's go to JP Mortgage, 60% win on JP Mortgage. Now we go to a different stock, Frost, 14%. I mean, like, and then also, guys, what I do recommend, like, okay, so this is a bonus tip. If you are a dollar cost averaging strategy, I recommend only buying the stock when it's under your average cost. And if the stock cannot go or it doesn't go under your average cost, then I just recommend buying a different stock, because we don't want to make this average cost more higher than what it is. And in my opinion, man, I still make the mistake sometimes on buying at the highs. And when you buy at the highs, this average cost it jumps a huge number, and I do not recommend that. I mean, yeah, like I'm sad that JP Mortgage is going to the moon without me. Like, look right here, I bought this. Well, I know I bought it like around 140, but like I said, I bought it at the 52-week high, which is really stupid of me. And yeah, this thing jumped like almost $9. So, like I said, man, just make sure to buy the stock when it's under your average cost. Do not buy it above your average cost, man. This will affect your account huge. If you want to buy a stock, make sure you just buy a different stock. Make a freaking watch list, man. Go pick every single stock from start to end. And that's what I did to make my portfolio. I click every single freaking stock. Like look right here. A screen that I use from Robinhood. So what I did to pick my stock, I just went through each single freaking stock and look at their metrics, and that's how I made my portfolio, which is right here. I made my watch list right here, guys. So I have right here have Exxon, TXN, PNC, PayX, Frost, Ross, TJX. These right here I recommend buying, but at the same time, we are all different. We all have different opinions, different risk. It just depends on you, man. But this is what I use to pick and make a watch list, guys. But hey, man, that's it for the video, guys. Take care, and I'll see y'all next time, guys. Peace.